Option.com. Alan, you got BP on your mind this morning. Of all companies, you're trading some energy?
Yeah, you talked about crude oil, and I think it got a little overdone to the downside. That's what some big analysts were saying, Goldman Sachs saying that it was farcical to see a 25% move, and the assumptions that what people were making to drive the prices down just aren't realistic. So if you look at crude oil, it's been trading between 45 and 85 for the year. So the 65 is an important pivot point, and it's about 25% off its high. So I see some value here, but also the overall market. You saw the S&P obviously make new relative lows on Friday, taking out that Wednesday bottom. So test and reject. If we've had a 250-point drop, if we get back above this midpoint, this 46.25 in the S&P, that would see a V recovery. And every time that's happened, you take the distance of that drop on the old top, that would be S&P 5,000.
Wow. Okay, so I like it, Alan. And what more can you ask for? Higher highs, higher lows. BP's looking pretty good.
Yeah, if you look at this chart here, it's 10% off its top. It's really been between 20 and 30 for the last year of trade. So 25 is a really important midpoint pivot. It's still up 30% in 2021, so it still has some momentum to it. What I'm looking at here is my stock substitution strategy. I'm going all the way up to June. So June option has more than 6 months of time. If you remember the analysts just a couple weeks ago, we were talking about $150 crude. So, there's a lot of opportunity there. And I do like the fact that we talked last week that everybody was worried about high energy prices being a bad sign. Then they were worried about low energy prices being a bad sign. You can't have it both ways, but I like the way this stock is set up. This stock was at $80 back in 2007, so it's not even half of what it was in the crude heyday.
All right, so looking for the June 17th, 25 call. So you're going with the Alan Nuckman special here of the in the money and looking for the push back to the record. Okay, and this is a distinctly non-tech stock, Alan, so a little bit different than the majority. Most of the trades you've been looking for have been, for the most part, tech-focused. Is this a shift in the area you want to be in this market? Is this an implicit, fundamental expression?
No.
Okay.
But it is a macro position because as the market comes back, as the economy comes back, crude oil comes back. But if we want to talk about last week, HPQ is the trade that we did last week, and that was a momentum play. We were looking for more momentum.
Yeah, you got it.
It did make new highs, and we got within 15 cents of our target. So, it's about identifying stocks that are going to move, and very, very small moves mean big gains. So last week, HPQ rallied from, 37 to 38.50 or so, 36 to 38.50. But the option was up 45%. So these in-the-money options, using these options in the money instead of buying the stock, has much bigger payoff, much lower risk. Now, the June option here in BP is only $25 more expensive than April, but you're getting 2 more months of time. So I'm taking time out of the equation. We all know that a lot's going to happen in the next 6 months. The break even on this option is about 50 cents higher. So if we're at 27.50 right now, in that stock, so, we're looking at that 25 call, so it's $1.50 higher, sorry. Mm-hmm. So, we're not asking for great expectations here. We're just looking for modest moves, and the $30 level is kind of an interesting midpoint of the last few years. If you look at the charts, it's a better resistance level, so we'll see if
that's right.
It goes there. But I like the way it's set up.
BP's gap during the COVID sell-off is right there at $30, to your point. Yep. So looking for at least a push back there. Okay, not too much to ask is the message that I'm hearing. All right, Alan, thank you for the morning trade as always. Mr. Nuckman, yes, sir, Chief Market Strategist at BullseyeOption.com, getting along BP with an in-the-money call. Let's talk big picture on the economy next. Our last jobs report, we ended